Good afternoon, everyone. Hope you can hear me very well.
Good afternoon, we can hear you.
Yes, I welcome everyone to this November edition of our Masterclass. So the title of my presentation is Determine True Gain on Your Investment. So I have the following table of content to
Mr. Speaker, please, sorry to interrupt. Please put your presentation in presentation mode.
Okay, thank you.
Mode. Yes, thank you.
Sorry. Sorry, can you see very well?
Yes, excellent.
So, I have the following table of content to deal with. What is an investment? At the end of this class, an individual should be able to know the meaning of investment, types of investment that we have. On what basis do we classify them into different types? So then from there, we are going to take one of them, which is financial investment. What is financial investment? So classes of financial investment. So what are into different classes of financial investment? So we have return/gain on financial investment with samples. We are going to take practical real life example on that. So then lastly, I'm going to take us on how to calculate the true gains of investment in stock. Stay tuned as you enjoy the class. So what is an investment? An investment is an asset or item acquired with the goal of generating income or appreciation. So why did I use the word appreciation? The reason for investing your money is that you are expecting an higher return at the end of the day. So an individual purchase an investment with the intention not to consume now, is defying his consumption now for later days. So by virtue of that, he's investing now, he will consume later. So by so doing, you are creating wealth for yourself in the nearest future. So investment is just the outlay of resources today. It may be time, it may be effort, it may be your money or your asset. So with the hope of getting greater payoff in the nearest future. So that's the meaning of investment. So types of investment. So we have many ways of classifying investment, but for the purpose of this class, we are going to look at financial and economic investment. So on what basis do we classify an investment to financial and economic investment? So the decision between economic and financial investment is based on their assets and their goals. In terms of asset, financial investment look at assets such as stock, bond, mutual fund, exchange traded fund, ETF, and reinvestment. While economic investment has a narrower scope because it only comprises of investment like machinery, land, and labor. So in terms of their goal, the aim of financial investment is to generate capital gain. Capital gain in the sense that you put your money now, you have higher returns in the future. Why economic investment is on production process. It's because you want to produce, that's why you invest your fund into it. So further, we can also classify economic investment and financial investment based on these following in terms of their meaning: asset, objective, and example. So in terms of their meaning, financial investment is a new investment or old asset with the aim of earning more in the future. Why addition to the existing capital in order to produce goods. That's the meaning of economic investment. So in terms of their asset, financial investment have both real and financial asset, while economic investment is just only the real asset. In terms of the objective, is financial investment is just to make financial gain, while economic investment is to improve productivity, is because you want to produce and you must improve your productivity. That's why you embark on you embark on economic investment. So example of financial investment include share, bond, new or old asset, while economic investment is when you purchase new machine, factory, and the rest. So only financial investment will be considered in this class. So maybe later in our master class, we take economic investment. So what then is financial investment? So financial investment is when you put your money aside. So with the aim of having more gains on your investment in the later day. So, and it had time dimension. It had a time speculated for it. Say, for example, it may be yearly, like treasury bill. It may be 5 years, it may be 6 years that you put your investment. So financial investment is an asset that you put money into with the hope that it will grow or appreciate into a larger sum of money. That's financial investment. So, you know, the whole idea of financial investment is that at the later date, maybe in a year, 2 or more, you have more fun. So basically, I can say financial investment is making money out of money, making money out of money. So what are the importance of financial investment? This aspect is very, very important if you are going to invest in financial investment. So it prepare a safety net for the latter year. You know, when you put your money aside and the money appreciate, so you are not going to get the same amount you put into it at the later date. That's a plus to you. That's an advantage to you. So it ensures you save for a rainy day, you know, where the economies are not stable now. But when you put your money into the financial investment and then your stock goes up, the price goes up, you have a better return in the future. So it also controls an individual spending pattern. You know, ostentation and extravagant lifestyle are barrier to capital accumulation. So, but when you are able to put your money into stock and the rest, so instead of spending it now, you enjoy it later. It guides against inflation. This one is very, very important. You know, when you have all your wealth in cash, if inflation rate comes, your purchasing power will reduce. But when you put it into stock, bond, and the rest, and when there is an increase, when there is an inflation in the system, it will pay you more. Your return will be high. So it also allows for wealth creation. It's a form of wealth creation. Diversify your assets. Don't put your wealth in one basket. You can buy different financial investment that will later give you more returns in the future. So it is a form of saving for retirement. You know, the old people understand it. Majority of us were beneficiary of those their returns on their bond, stock, and the rest. So they will just say, maybe whenever they need it, for maybe to pay our school fees. So they will just sell part of their investment, financial investment, and they use it to pay school fees. So some parents also, they buy stock, bond for their children because they know the price will appreciate in the later day. So what are the important concepts that you need to consider before investing your fund? These are very, very crucial when you want to invest in financial investment, because what you don't know, you don't know. What you won't learn, you won't know. What you don't know, you will later pay for it. So please, this aspect is very, very crucial. So number one important concept that you need to know, that you need to consider before you invest your fund. Planning plays an essential role in financial investment. You don't just invest for investing sake. You don't just. You have to understand the reason why. So that's the reason for the previous slide. Why am I investing? Is it for a later date? So you must also understand the reason why I want to place my money in a financial investment. So also you need to explore all the investment plan available in the market. You don't just say, okay, let me just put my money here. You need to know the advantage, disadvantage. What are the policy? What are the risk factor that you need to consider? Although the risk factor, this class cannot cover the risk factor. It's only the gains on your return. But you need to know those things before you place your investment in any financial asset. So also you need to appoint a good financial planning manager who take care of all your investment needs. This is very crucial because they are the expert. They are those people that know where you want to place your fund. They know, they have information. This is what they do every day. You are just coming and say, this one is doing well, but they will be the one that will advise you through their knowledge and the rest. They will manage you. They know your income, they know your family, they know everything about you. By virtue of that, they will manage you very well. Not to put your fund in the wrong direction, because at the end of the day, if you put it in the wrong direction, there won't be any return. So also avoid cash transaction. So what did I mean by that? Most of the time, it is advisable you use pay check and transfer. Transfer nowadays to those companies that you want to invest in. Don't just say, I trust somebody. The person may embezzle your money. And that's the problem we're having in the financial sector nowadays. So because a lot of fraudsters are there. But you, as an investor, you have to be very, very wise by placing your investment, by transferring to those companies directly. Transfer, you can make transfer. But this last point is also very important. Make sure you compile all the relevant documents and put them in a file. You know, nowadays that we have electronic way of doing all these things. You just create a file on your system, have a folder, put everything intact. Because if any of the documents is missing. At the end of the day, you may pay for it. You may pay for it because that will not make them to pay your dividends and your return. So classification of financial investment. Financial investment can be, classes of financial investment can be classified into three. We have lower risk investment, we have moderate risk investment, and we have higher risk investment. So for the lower risk investment, so lower risk investment consists of stable investment with steadier return because they carry low risk. The risk is very minimal. And that's why the return on it is also very little. So the return of these lower risk investment are always in form of income. So while the moderate risk investment is a combination of the lower risk investment and the higher risk investment. So what then is higher risk investment? This investment has higher return, but the risk of losing your money is also high. The volatility is very high in the short run, but if you can scale through in the long run, the return are very high, very, very high. The higher the risk, the higher the return. So financial investment risk and return characteristics. If you look at this, my chart, you will see that for the lower the risk, the lower the return. Look at cash. When you keep your money in bank, when you hold your cash, so except if the bank fold up, that's where you lose your money. But it has lower risk compared to other. So, and if you look at it, they are moving in form of hierarchy. So fixed investment, so those are fixed interest rate investment. Those are investment in stock or bond, like a year, blah, 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 that you, treasure bill that you put for a certain number of years. So like 90 days, and you get a return on it. So people also invest in properties, buying of properties. The risk is also a little bit higher. So also people invest in infrastructure like road, blah, blah, blah. And if there are issues, maybe one government came, so that's the end of the investment. I say, oh no, we are not this road, blah, 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 and the rest. So also, the one that have the highest is shares and private equity. You know, shares, most shares are public company, while private equity have to do with private firm. So that sell some share to some people in the society. So we, under the low risk investment, we have different types. So we are going to take some like cash and fixed interest. So you know, cash is just when you put your money into bank deposit or short-term money market security. So you know, I told you earlier on that the return on this is little. So, and the probability of losing your investment is also very low, very low. Are you getting it? So cash investment include short-term government bond, treasury bill, and commercial paper. So, and the major risk to this one is when it is the time for them to pay, and the usual is not able to pay. That's the only risk associated with cash investment. So also, we have fixed interest investment. This is when you put your money into a fixed asset, your principal into a fixed asset with the aim of getting a return in the future. So this includes bonds, certificate of deposit, debentures, and the like. So also we have higher risk investment. Higher risk investment includes shares, infrastructure, and private equity. So, shares make it to become a part of ownership of a company. In the sense that you are now a shareholder when you purchase certain unit of that company. So, by virtue of that, so the proportion of that company share capital and asset belong to you. Also, the liability of that company, you share in it also. But the risk associated with this include capital loss, volatility risk, market risk. We have sector-specific risk. Sector-specific risk, maybe you invest into manufacturing or the industrial sector. There are risks associated with the sector. Stock-specific risk, the type of stock that you invest in. Time risk and exchange risk, those are the risks associated with share. So infrastructure and private equity. So those are physical assets. So they are physical assets related to operation that provide businesses and society with essential services. So these are into different sectors like transportation, utility, natural resources, and the rest. So there are a lot of risks associated with that too. So let's now how to determine the true gain on your investment. How do you determine the true gain on your investment? These are the major things that we need to know in this masterclass series. Okay, I'm going to take a sample of a particular sector, the banking sector. I'm selecting only 5 banks from Nigeria. Those are the part of those banks that are listed in the stock exchange rate for 5 years. But please take note. So this is just for illustration. We are not recommending any investment for anybody. Are you getting it? So we are just saying, okay, within this period and this period, this is what happened to this one. So, but that does not mean if you now invest now, it's still going to be the same thing. You are getting it. So that's how you need to master your. So I'm selecting these 5 banks from the period of 2017, January 2017 to December 2021. So that's a period of 5 years. So we have certain amount that you are going to buy, you are going to purchase it at January 2017. So if you put if an investor purchase Access Bank, then in January 2017, the share price is just 5 naira 81 kobo, while that of First Bank is 3 naira 40 kobo, GT is 24 naira. So UBA is 4 naira 45 kobo, while Zenith Bank is 14 naira 40 kobo. So at December 2021, so the price of Access Bank share has gone up to 9.3. So why that of First Bank, 11.40 kobo, and so on and so forth. So from there, I was able to calculate 5 years return for each of these stocks. And if you look at it, First Bank have the highest return in 5 years. So 1 year return using simple average alone. We know we have other methods that you can use and the rest. So First Bank for a year, the return was 47.06%. So calculating true gain of your investment in stock, we have different methods of calculating true gain. So I'm selecting for the purpose of this masterclass series. So using share price. So how do you calculate your return using share price? So this is just using the price at the end of the whole period that you put your investment minus the purchasing price divided by the purchasing price. In percentage, you have your share price. So also, you can use share price plus dividends. You can use share price. You can use share price plus dividend. That's another way of calculating it. So, some share will pay you dividend per year. Maybe you purchase in April. So next year, April, there will be a certain dividend. So you have to add that dividend to share price. That's another way of calculating. So we have another one using share price plus dividend reinvested. So we call that one DRIP. DRIP means dividend reinvestment plan. So how do you do that one? So instead of taking your dividend and take it home, you can still reinvest that dividend into the share. So in order to see more returns. So also, the last one is using share price plus DRIP, and you have to minus your fees or transaction costs. There are a lot of costs in the process of buying this, which you incur. So take for example, there are, I told you you need to have a manager, fund manager that will manage your share. So the person will collect certain amount of money from you. Take for example, is the one that helped you to buy. Okay. At the beginning, the person will tell you, okay, buy so number of share, I will collect 5%. So at the end of the whole day, when you want to sell, which is the person also that will help you in selling the share, we still collect certain percentage. In the process, monitoring your fund, your shares and the rest, monitoring your stock for you, the person will be incurring some costs, like calling you and all those things. There, you are still going to pay certain percentage to the person. So let's go to the calculation proper. Okay, using the share price. Take for example, selecting the First Bank share. If you purchase First Bank in 3rd January 2017 at 3 naira 40 kobo, as at 34 December of the same year, it rose to 11.4. But please take note, if you buy at this place and you sell at this place, that's the only place you are making profit. But if you go and buy at this peak, which is higher than the selling the last year that you sold your share, you are losing. So you need to know where to buy and where to sell. So using share price, using this one, your calculation will be based on the share price ending minus share price beginning all over share price beginning. So share price at the end of the year is 11.4 minus 3.4 divided by 3.4. That's for the 5 years. So you are having 235.27% for 5 years. So using simple average for 1 year, if you divide by 5, you get this return on your investment, which is 47.06 on your investment, simple average. Okay, using share price plus dividend. I told you earlier that some company pay dividend, like First Bank. I tried to get the dividend for those years in 2017. So the dividend pay per share was 0.2, was 25 kobo. In 2018, 26 kobo. In 2019, 38 kobo, and so on and so forth. So if you are using this formula on calculating your return, it's going to be share price change plus dividend all over share price beginning. Share price change is just the difference between share price at ending minus share price beginning. Then the difference, you add it to dividend, then you divide it by share price beginning. So I have done that. If you look at the total dividend is just 1 naira 69 kobo. So add it to 8 divided by 3.4. We have 285% for 5 years. So simple average, yearly, you have 57%. So also, moving further, using share price plus dividend reinvested. So this one is a little bit different from the previous two that we have done. So here, you are not using per share price. You are using the overall value of the asset. Okay, take for example, at the beginning of 2017, you buy, you purchase a share, let's say 1,000 shares at the beginning of 2017. And, they are going to pay dividend over the period, which I've already showed earlier. In 2017, the dividend was 25 kobo. Okay, so per share. So, and you have 1,000 share with First Bank. So you are going to do some manipulation, some calculation. So if I invest this, how many share will this one get me? So you add it to your share at the end of 2017. That will be the next year share for 2018. And so on and so forth. The dividends of that year, you look at it in terms of the share that you can get. So I've done that. So at the beginning, the individual have this. This is cumulative after the calculation for the whole 5 years. So this is the total value of that share at the end of the 5th year. So you just multiply by the price, you get the value at the end of the whole day. So you just take your final value minus starting value all over starting value, which is this and this. So we have the return at the end of the day is 145.02% for 5 years. On a simple average, we have 29.01%. So lastly, we have another way of calculating and this is very, very important. This is the main of this course, the main reason why we have this masterclass, in the sense that you are going to minus all costs that you incur in the process. Some people will think that they are making, the return on this share is huge. But if you look at it in real time, it may not be like that. Because fees and other expenses can eat away your profit or also add to your losses. So make sure you factor in all these things before you make decisions. So at the beginning, you have an expert that help you to purchase. Let's say you pay 5% as a transaction cost to buy. So in the process, we have service to hold. Service to hold include management fees, incentive plan, cost of communication. The person will call you. The person will give you some information. The person will give you an advice. So let's say you pay 10% for that. So invariably, out of that your percentage, you have 20%. You have to minus that 20% from the one you call your return. And by doing so, the return for 5 years is just 125.02% for 5 years. And for a year, you have 25% on a simple average. So in summary, let's see what we have done so far. Using share price, we said in 5 years, the return on that share was 235.29%. Using simple average, you have 47.06%. Using share price plus dividend, you have 285%. Using simple average for that year, you have 57%. So using share price plus dividend reinvested, you have 145.02% for 5 years. So using simple average for a year, you have 29.01%. Using share price plus drip minus fees and costs. So we have 125.02% and 25%. So that's your real return. So that's the way an investor needs to think. So the real returns are not like you have to factor in other costs that you incur in the process of investing. So in conclusion, it is too risky not to take a risk. Take risk. If you win, you are happy. If you lose, you'll be wise. It's too risky not to take a risk. Thank you. Thank you.
Thank you very much. Thank you very much. Hello, can you hear me? Yeah, I believe you. Yes, thank you very much for that excellent and wonderful presentation, Mr. Oyelade. I believe that we have gained knowledge from that presentation, and yeah, it has opened our eyes to a lot of things concerning how we can arrive at our true gain based on our investments. For me, the take home is before you venture into any investment, there are issues and things to consider before for any investment that one needs to go in. And that what gets to you as investment needs to be taken, needs other things to be taken into consideration, some costs and fees to arrive at what can be called true gains or true profits. So moving forward, I want to open the floor for discussion, and we believe that we have eminent economists, market practitioners in the house. I will want to add one or two things to that presentation. First on the list, I would like to welcome to the floor Professor Erega in the house to give us his own perspective on this topic, determine your true gains on your investments. So we want Prof to share his knowledge with us on this topic. Prof, you are available and you are ready, please. We would like to have you on the floor.
Okay, thank you so much, Moses, and thank you, Adora, for that insightful presentation. I think Adora said it all. Just to add one or two things to what he has said. I know quite well that when you talk about investment, everybody's interested, and it's something that, everyone, look up to. And over the years, we have had a lot of experiences in Nigeria. For instance, the case of MMM and some other cases we have had recently where you see some companies that have collected money from people who are in the process of that disappear with their money, and then several of these issues here and there. Investment is part of, what we make someone to accumulate wealth, because wealth is very important. And also look
Hello? Hello, it's Prof. It's like we have lost Prof. Maybe because of his network. I want to, while waiting for Prof to come up, because of his network, I want to know if Mr. Dotun is around. Okay, in the absence of that, I want to know if Mr. Miwa is in the house.
Yeah, good afternoon.
Good afternoon. Please, we want to have your position on this topic. We have 5 minutes, sir. Thank you.
Okay, all right. I think the speaker have done a good justice to the topic and cover a wide range of options to give us a very good knowledge about what is required to determine true gain on investment, specifically in stock. I particularly enjoy the calculation process and the explicit process of different options or having at the true picture of returns on the investment. I just want to add from my experience and practice as a reporting accountant for an asset management company based in Lagos. I want to also add that maybe another time, we can also consider the time value of money, in connection to this kind of a calculation. That if I am putting my money in investment, the speaker said I have to consider the cost of that investment to get my true, gain. Then what about the time my money stays in that investment? What other value could I have, got from there? How do I give value to the time for which I've forsaken that money to stay in that investment? How do I get a value for that, for that cost of the opportunity cost of leaving my money to be in that investment? And that will lead me to another second point to that, which is alternative investment yield. To determine my true gain in that particular stock I've chosen to put in my money in, what is the other options I have by the time I'm making that investment in stock? What are the other alternative investments I could have put my money in? What would have been my yield in those alternative investments? Then I compare it to know if investment in stock really paid off for me or not. And those are the kind of things we also, put into consideration for our clients when we are competing, trying to convince them on investing in stock and why they should invest in stock, getting to know their true gain or loss of putting their money down, in stock. So it's very important for us to also consider those two options, those two lines, which is the time value of money and the alternative investment yield. If I'm not putting my money in stock, if I'm putting in other investment options, say money markets and other, available options to the investors, comparing it with putting my money in stock to know if it's actually worth it putting my money in stock, and how to go about this kind of calculations as well. We will help listeners and audience in the future. Thank you very much. That was a very good presentation once again, and kudos to analyst team. Thank you.
Thank you, Mr. Miwa, for your contribution. Yeah, it's very important that time is considered, because I always ask that what is the value at the end of the investment in, what's the value of that investment when you consider the issue of inflation that whittle down the value of the money, the purchasing power of the money, because the 1 naira of today in the next 5 years is what that 1 naira is able to buy today is not going to do the same in the next 5 years. And that's why people look at a short-term investment that can bring a good yield or gain, so that the value of the money is still there intact. And because of that, it opened people to a lot of investment portfolios, whether the ones that are good and the ones that are not good, and the one that of different kinds of schemes. So we need to be very, very careful when we are going into investment, and knowledge like this help us to make informed decisions. Thank you very much, sir. I want to invite once again back to the floor Professor Erea. I think we lost him the other time due to network. Professor Erea, we are welcome back. Please, the floor is yours. Thank you.
Okay, can you hear me?
Yes,
Hello?
we can hear you.
Okay, sorry about the last. I think I don't know my network, or maybe I was muted. Okay, I think the presenter has said a lot of things, and with what Mr. Miwa has said, a lot has been said. I would just say that For those who are interested investors, right? We should be careful about so many schemes that are out there, so many. One way you can guide yourself from those kind of scheme is to look for normal. I'm sure Adora would have said or would have informed us that your gain is basically the rate of returns over the cost, and cost there has to do with the capital. I mean, the user cost of capital, right? So, and you can easily know the user cost of capital. For instance, what is the annual interest rate in the economy? If you know the annual interest rate in the economy, and somebody comes to you to say, if you put your money in this investment portfolio, right, you have so percentage. Quickly do a small mathematics with that percentage the person is offering with the annual interest rate in that economy, right? Vis-a-vis to inflation in that economy. You can know whether that investment is real or not, right? Because somebody cannot tell you that in this Nigeria economy where inflation is about 20%, okay, and lending rate is currently probably around 27% or something, then somebody that's come to you to say your investment in a month or 2 months or in 3 months will be about 30% return. There's something is wrong somewhere. So what I mean is that, so you consider all of these factors in terms of the user cost of capital, which is the interest rate within the economy, and inflation that happens in that economy, to know if what the person is offering is actually within the context of what is feasible. And that can be a serious guiding factor to know that there is risk into that investment you are going into, even though we know quite well the investment is risk itself, right? That is one thing we should be conscious about. But there are so many schemes out there, so many of them, so many. And I think I even saw a question where somebody is asking something about cryptocurrency. Yes, those are investment. Cryptocurrency, for instance, a lot of people have put their money in cryptocurrency, and today, with the price declining, a lot of people are already also crying. That does not mean that cryptocurrency is not a portfolio for people to invest, even though in Nigeria, the government has put a ban around Bitcoin and all of that. But cryptocurrency is money in the first place, and money should serve as one unit of account, should serve as store of value, and then before serving as day-to-day transaction, right? Those are the things about money. But for cryptocurrency, it has defeated, I mean, it has not served any of those purposes, in the sense that it is serving more speculative demand, and that is more of like investment asset than the key function of money. So for that kind of asset, you are sure that over time, what is driving it is more of, not because it is backed by an asset or a production process, but it is actually the prices is, I mean, the trend in the price is actually driven by information, right? Or by emotions, or by what people, by that speculation that is behind it. And that's the reason why the price is trending up. And over time, the same emotions of the same kind of I mean, the factor behind is trend can also be the reason why it can also begin to go down over time. And that kind of asset is a very volatile asset. So, and we need to take a caution. But my point is that with what he has taught us in terms of looking at the gains for investment, and we are all looking at for where we can put our money to have good investment. But the returns you get in an investment is a function of the economy that you deal with. And there are a lot of macroeconomics indicators that can guide you. And one simple one among them is your inflation of that economy, the interest rate in that economy, vis-a-vis the rate of returns that you get, which is the difference between what you put in and then how much is being used to borrow money within that economy, vis-a-vis the inflation markup on that borrowing. Those can give you a serious guide whether that investment is going to be real or it's not going to be real, so that you won't fall into the wrong hands. That's the only thing I will add into this discussion. Besides that, I think investment is something that everybody should look up to, because I will always tell people that yes, income is fine, but income stops one day, right? But you need to go beyond income, and that is wealth creation. And we all know that as economics, wealth is something beyond income, which is asset plus some other flow of resources. And investment is one way in which you can accumulate wealth. wealth is accumulated, wealth is not instantaneous, wealth is accumulated, and investment is one way you can accumulate wealth. But as we look forward to investing in different portfolios, there are a lot of them, whether it's stock price, there are even stock prices that are different of them. For instance, somebody comes to you to say, invest in the stock of this firm. One way to know whether that firm is doing well is to look at the production or look at the performance of that firm over time, right? And that is one guiding principle for investing in the stock of any firm also. One simple way is to look at the performance of that firm. If the firm is performing well over time, then it's something that should give you some, positive guide to either invest in that firm or not. So look at the performance over time. It's very, very simple to do that, right? But beyond stock, there are also other fixed income assets that we have that are doing well that you can put your money into. But I think there are a lot of investment advisors, investment firms that can also guide us. But in the midst of when people give their money to them, also make inquiry about what kind of asset they are putting your money, so that you can also make inquiry before you accept that as where you should invest your money or not. I think that's what I can add to what he has said. Thank you so much.
Thank you, Prof, for your contribution. And we are going to question and answer session right now. And quickly, we want to announce that we will open floor for anyone who wants to ask question. So if you want to ask question, you can either type it in the chat box, or you raise your hand and we'll call you. And you go straight to your point and ask your questions. And that is how we are going to handle question and answer today. But before we see any hand up now, we have somebody, I think the person that asked question about the cryptocurrency, Professor Herrera's comment has addressed that, I believe. And secondly, the other one says, what do investors do in the face of high risk of uncertainty? The high risk uncertainty investment returns. I don't quite get that question, but I think it's asking for what an investor should do in the face of his uncertainty. So I don't know, the facilitator, please, you can shed more light on that question to provide answers to it.
Okay, thank you.
Can I make an attempt?
Okay.
Okay, please, I'll go ahead.
Okay. Thank you, Moses. Sorry, am I audible?
Yes, go ahead, sir.
Okay, so once again, good afternoon, everyone, and thanks for joining this masterclass series. And Adua, thanks for that wonderful presentation. I think it's very useful. Maybe I should just say that my own take home from your presentation is that we should not eat all. We should, no matter whatever we make, we should try to invest. We may be involved in economic activities where we expand our factories, invest in labor, capital, human development, buying land, machinery for our business. But in addition to that, you are advising us that we should set aside some money and place them in financial investments so that we can earn higher returns for the future. I think that's very useful. Other thing I learned is that we should seek expert opinion. Sometimes we just by emotion, this is what my friend said, and this is where people are putting money, following crowd, bad one got effects, which is called herding in finance. Because of that, some of us just place our money in places where our colleagues are placing their money. I think what I hear from you is that we should seek expert opinion. Even though the expert will collect some money, they may be no way compared to the kind of loss we may suffer.
Hello?
I think we lost them. Is anyone?
All right. Sorry, I'm sure they'll be back soon. Please give us a few seconds. I'll reach out to them now to know what's happening. In the meantime, please, if we have anyone who has any question, please feel free to drop in the chat box. And as soon as they come online, we can take all the questions. We'll make sure Dr. Oluokere and Nigeria can take the question. I think it's the entire team that went off. Maybe they're using the same internet and something happened. Professor Herrera, are you able
Yes.
to chime in on the question on
Hey, my network logged me out. I'm just coming in, so I didn't even see anything on the chat box anymore.
Oh, okay, yeah. So there was a question, an earlier question that was asked about what investor can do in face of high risk and where there are uncertain investment returns. That what can investment do in such a circumstance? Do you get the question, or I should repeat myself?
You were saying that in the face of high risk,
Yeah,
right?
high risk environment where investment
What
returns are
should
uncertain.
investors do?
Yeah, exactly.
Right. Well,
Yes.
let's also not forget that when investment is in different form, okay, and because they are of different forms, they also come with different risk. And individuals also are also different. We all know that we can classify individual investors into three types of classes. Those who are risk loving, those who are risk lovers, and those who are risk averse, right? So it depends on where you fall into, right? Whether you are risk loving, risk averse, or risk, anyone you fall into. As far as the investment is not a Ponzi game, right? And if you are a risk loving one, I'm sure that you want to invest in it. But I think the key thing take home point is that for an economy like ours, where there is a lot of uncertainty makes people investors to withdraw from putting their money in any of the portfolios because investment is risky at that time. And so my point is that it depends on what type of investment. For instance, if you are investing in bond in a volatile economy, I don't think that is a problem because you are sure that government is a continuum. But if you're investing in a stock, which is a share, a stock of a company, and then you need to take a critical look into the company, whether that company over time, because the risk in the economy probably can
Hello, Prof. Are you still there?
I think that network has carried Prof away too.
Okay, welcome back, Dr. Olu. So we were just discussing the topic.
Hello?
Oh, okay, Prof, please go ahead. We have Dr. Olu Okere also.
Okay,
Please go ahead and complete your response. Hello, Professor Rea. Hello, Professor Rega. Dr. Loke, are you now back?
Yes, I'm back. I think.
Okay, please.
I finished my point.
So the question basically, what you were responding to. So the question of what can investors and an investor do in face of a high-risk environment where investment returns are uncertain. I guess that was the question you were responding to.
Okay,
and particularly, maybe you can just touch on simple hedging options for an average Nigerian in a period like this. So maybe that might be an interesting insight to also provide to the question.
Well, thank you very much. So I think I was making a point which is related to that, we need to invest. We need to be very careful in terms of what we invest in. We need to seek expert opinion. We don't just have to follow the crowd. And I think those are some of the things that can lay foundation to anything that we may want to do. So now coming to the question of what do you do in the face of high risk or uncertainty investment return? I hear Professor Rea, he was trying to say, depending on the kind of investor, whether you are risk loving, risk neutral, or you are risk averse, or even within the risk aversion bracket, there are different levels of risk aversion. Some can be more risk averse than the other. So your level of risk aversion will then determine how much return you will be willing to take given a particular size of risk. So a high risk environment may not be a bad issue.
Hello, sir, are you there? Hello? I think we have lost Doctor again. Why we Mr. Adesoji or Dr. Adesoji, please can ask your question. Thank you. Unmute your mic. Mr. Adesoji, are you there?
Yeah, good afternoon, Dr. Douglas and everyone, and thank you for the presentation. Actually, Dr. Oluoke was already answering the question. I was trying to say that, we have, as Professor Herrera said, that we have different types of investors because depending on their disposition towards risks. But looking at the macroeconomic environment, particularly in a developing country like Nigeria, where there are a lot of uncertainties, volatilities in price and other things. So the returns, the certainty on the investment returns is very uncertainty in investment returns is very, very high. So I was just trying to ask that what can investments do to hedge some of these risks? Although the presenter has told us that it is risky not to take risk, but what level of risk is actually acceptable, and how do investors hedge some of these uncertainties in investment returns? That was my question. Thank you. Please, was I audible? Was my question answered?
Yes, you were. Yes, you were. We could hear your question. Mr. Eric, you also had your hand raised the other time. Would you also want to ask your question, Mr. Eric?
Yes, thank you so much for the presenter. I wanted to check. My question goes around, someone who must have invested before in the previous, maybe in other companies, and the person doesn't have any. Let me put it this way: someone who is no longer in Nigeria but invested in so many companies back then, and doesn't have any thing to show that this is what companies that have invested, like buying shares from the companies or number of shares that are bought or the certificates. If I don't have all those things handy, how can one trace before I start investing in more companies? How can one trace the number of companies the person must have invested in, or to know the number of shares the person have invested in previously? So how can one trace that before starting a new phase of investment?
Okay, thank you. I think we
Is
have
that clear?
yes, yes. Hello, can you hear me? Can I go ahead?
Yes, yeah, go ahead, please.
Okay. I want to know if Mr. The facilitator is here to provide clearance to that question, or anyone that wants to respond before I say something. Thank you.
So for this question, I would want us to have Dr. Afolabi Oloekere, who used to be with the Security and Exchange Commission before some months back, to really answer that question. I think it's a very important question. So are we able to get Dr. Oloekere to answer that question, please?
I'm here, but I didn't get the question.
All right. So basically, the question is for someone who has invested in an era when you maybe don't have enough information to be able to enough information, or say certificate that helps you to ascertain the ownership of your investment portfolio in Nigerian companies. So how do you, is there any way you can check to know if, for example, somehow mistakenly or knowingly you had invested in Guinness and you didn't know, and you don't have those kind of records? I think that was the question Mr. Eric was trying to ask. So how do you get to find out? Maybe if you've had some form of investment in some companies, particularly in Nigeria, maybe you bought shares at some point, yes.
Okay, so
that is correct.
Mr. Eric, feel free to add to it.
No.
I didn't capture
No,
it.
you've got everything. That is correct. That's my question.
All right.
Okay, so that's useful. Interestingly, I've answered this type of questions severally before. There will be at least one evidence. Some of these evidence can be maybe the receipts of purchase, or a note from whoever you purchased through, or a kind of a dividend warrant, or any form of evidence, or any evidence that you made a payment towards that. There will be at least something somewhere. If you have anything, all you just have to do is to approach a stockbroker. I'm aware that Security and Exchange Commission at the time had a portal where you could just type in your name, then it tells you whether you have investment and in what particular stock. So I think that is still there. But in addition to that, the best is to approach a broker. In fact, it's also possible, Mr. Eric, that someone has bought different things under different names. That period, people were buying, they can do Eric Afolabi Azan, Modupe Afolabi Sharon, So I'm mentioning names that I see on the platform. So, but if there are evidence of purchase and you can show that you are the one, maybe there is a particular signature that can cut across some of these things, or house address or things like that. Those things, there are avenues for harmonizing them and making them your own back. I mean, that exists. So please approach a broker. One of the things that Adura said was that you need to talk to financial experts. And some of these things are done free of charge. Even if they collect money, it probably can be 150 naira or 200 naira. It's not really something major. Yes, I hope that answers the question.
Yeah,
Thank
that answers. Thank you.
Okay, thank you. Thank you, Doctor, for that explanation. I want to know if there's any other person that wants to ask question.
So I think the question on the options to maybe simple hedging options has not been sufficiently answered by Dr. Oluwakere.
Okay,
Perhaps he wants to maybe take a few minutes just to respond to that. Yeah.
Okay, thank you. So I was making a case that as long as return compensate the risk you are bearing, that is not a bad idea. The problem is, I mean, we are also assuming that you are not putting your money in an illegal or unregulated schemes, because if you put your money in an uncertain investment, maybe there is a particular token issued in Cyprus, or somebody sit down somewhere and say Forex, bring money, or somebody say buy commodities and sell tomorrow. If those things are not regulated, we may not be able to say the direction things can go. But if it's a regulated investment, I mean, by regulated, there are regulators in Nigeria, maybe like SEC, depending on the sector that the investment is. If you buy regulated investments, they can be uncertain too, or their environment can be uncertain, but as long as the return can compensate you for the risk you are bearing, that may not be a problem. The problem is in an uncertain environment when returns are also low. So the common principle or basic principle of finance that says the higher the risk, the higher the return, then breaks down. Maybe because of some macroeconomic environment that may have to do with the exchange rate structure, interest rate structure, such that the risk is so high that even legitimately you are unable to get a return that commensurates with the risk you are bearing. Therefore, what most people do is to hold on a bit and not invest. But you know, the problem with that is that your money is going to be losing value. So you also want to take some risk. People don't like things to be certain for a very long time. You want some level of uncertainty at least. So what you can then do in such a situation is to look for alternative investment class. Mr. Folashire Muiwab spoke about, you need to look at the alternatives. For instance, if I'm putting my money in stocks, there's an uncertain environment. What is the uncertainty? Maybe inflation is getting very high. Are there other investments that can give me return that can then help me hedge inflation? So there are some that have been able to invest in maybe dollar mutual fund because exchange rate risk can be hedged to some extent. And in recent time, at least starting from the beginning of the year, some of the exchanges in the country are also selling derivatives. Derivative in this sense, they started with futures, stock futures and index futures, where you can buy. So a stock is going in a direction, you may be able to buy another futures, maybe one of the master class. Mr. Anete may decide on that later. One of the master's class can start looking at what alternative exists for you to hedge the conventional investment assets. So you can start hedging. Some have hedged with commodities, whether in the formal market or informal market. There are also commodity exchanges that we can place our money in. So what is important is summary. The uncertainty, is it compensated for by higher return? If it doesn't, what is the problem? Are there alternative investments that I can place my money such that when I lose on this, I will gain on them? Most times also, when you gain on the conventional, you may also lose on those ones, but at least they will kind of minimize and moderate your losses. Thank you.
Thank you very much for the clarification and the comments. I think on the question of Eric, if I want to add one or two things there. There's a central system that contains every detail of investment from everybody. And there's a number that is given to every investor if you purchase any asset from a stockbroker or from any company. So if you can look further from where you got those information from, I think it will help, and contact, as has been mentioned, professional advice, stockbrokers, and experts. They will lead you on the right path. Thank you very much once again. I think we don't have any other question or anybody that is raising his or her hand, and we want to.
Sure. There's a hand from Luke Mano. Is that Abi?
Okay. All right. The floor is yours, Mr. Lukman. Thank you.
Can I go on?
Yeah, go ahead. Go.
Okay. My question goes this. If I have an investment with a stockbroker, maybe for like 1-2 years, and maybe I now decide, okay, I want to sell part of my investment, and he now started telling me that on behalf of me, they bought some stock on credit, and as a result of that, I cannot sell my stock anymore because maybe the stock they bought there, maybe they bought it at the rate of 10 naira, and the value now is 1 naira. He's now asking me to pay for what they bought on my behalf. What can I do to that kind of situation?
Okay, that's also interesting. But you know, that can also happen in the era. I mean, we also have a margin trading, margin loan. So that's called margin loan. So I'm sure you will be aware that those things were done on your behalf. Maybe they may not specify them very well because it may be at an era where everything goes. You know, as you say in Nigeria, everything goes. It may be an era where people are just behaving in a very interesting manner. But definitely, the margin trading kind of thing allows you to borrow stocks or to borrow money to buy stocks, right? You can have security lending where people borrow stocks and trade those stocks. Apologies, at any time I try to answer this question, something just happened. Don't worry, you get your body back. So, am I audible? I hope. Can you hear me?
Yes.
Okay,
yes.
so people can borrow stocks.
Yes, we can hear you. We can hear you clearly.
Hello. I think doctor is off again. Network is really dealing with us in Nigeria here. So let's give him a little minute for him to come up, then we round up this session. Okay, I think it's on now.
Okay, so what I just said is that if you notice some sharp practices, you can always talk to the regulator. But please, before you do, check with your broker. Maybe there were agreements at a particular time to buy some of those stocks on your behalf. So they are sitting on your books, you've collected money and you use them to buy the stocks. And you know, when things were doing very well, you know, there is a Yoruba saying, I mean, I'll still say in English, if you are killing normal fish, I mean, you won't tell anybody, but the day one kills a fish that you don't understand the nature, you then have to come back home. So maybe they also sold some things to you which you agree at a time. It may be very good at that time, but now maybe they are not very good again. So it's very difficult to then say, why would I enjoy the benefit but not the cost? But it's just for us to understand that people can borrow money, just like people do forex trading. They can borrow money to trade. They can trade beyond the amount they have, but that means they have borrowed money. But what happened is that at that time, they were not really doing it properly, because if those prices were falling, they were supposed to have asked you at that particular time to make certain payments in terms of margin call, to ask you to bring some money so that they can put in your account. But that time, everybody was doing the way they liked. And I think until the regulator stepped in. So please talk well, let them explain further to you. But if you notice some sharp practices, you can actually talk to your regulator. Thank you.
Okay, thank you. Mr. Lukman, I hope that has answered your question and clarified your mind. Yeah, I want to appreciate everyone. I think this is one of the most robust masterclass we have had so far, because of the topic of the day, which everybody is interested in investment and how to get a good ROI. And before we round up, I just want to bring up to the notice of everyone about one of the product of analyst ADSR, which is Anastat, which houses very large data sets. And one of the data sets that we have that is related to the issue that we are looking at today is the company financials. We have built up a very large data set on company financials over 10 years. So any investor, any market expert, professional expert that needs information about the market in terms of quoted companies and others, Analyst Data Services and Resource Limited is the place to go for. So we would like you to approach us if you are in need of any information about company financials. We have for many years, and we are ready to provide such information and such resources to aid your business, to aid your work, and also to aid the investment decision, as well as help you in your professional practice. So thank you very much once again, and we want to bring the masterclass to a close, and we appreciate your time. Please, let's call on Mr. Biodun Rahim.
So good afternoon, everyone, and we want to say thank you for coming on, joining us in our masterclass of ADSR this afternoon. Thank you, and I want to thank the facilitator of today's presentation, Mr. Adura Oyelere, for the very great presentation, which is very, very informative and highly thoughtful for investors. And again, it is also of interest to the academics as well. Some of the issues raised, we facilitate some probe in some areas. And at the same time, we want to thank the contributors, those that ask questions. In fact, like Mr. Emmanuel said, that we have a very robust discussion today. Thank all the people that have in one way or the other asked questions. And we want to appreciate Professor Erega for his insightful contributions, as well as Mr. Sengo for his contributions and interventions when the network from the ADSR was somehow. So thank you for your contributions. And the CEO of ADSR for his comments and contributions and answering questions. We appreciate you for your, of course, it's so reflective of your knowledge in Security and Exchange Commissions. So thank you so much. And to everyone who has in one way or the other joined in this our master's class, this will be the third one. So we say thank you, and we are looking towards having you in our next one that will be taking place in a month's time. And for those that are yet to register, please, the link is sent. So find time to just register you on that link so that we can have your detail. And not only that, so that we can send information to you on what ADSR, on the things that we do. You stand to learn and hear a lot from us. So, and then like Mr. Emire said about the Anastat, so we have data stock covering finance, covering different aspects of macroeconomic data. So you can get a lot from us through Anastat as that. And then we are having training, as you can see, on a program like that, including a lot that you can get from us. And also we are working on a book on Let's Figure Nigeria. So with time, we give details of that to us all. And as we are rounding off, I want to say big thank you all for joining us in this class, and looking towards meeting you in the next one in a month's time. Thank you, and remain blessed.
Mr. Thank you very much. The final announcement, the video of this masterclass is going to be available on our YouTube channel, and previous classes are also there. So you can go there and watch the video and share with colleagues. So, and we also will make announcements for the next masterclass. So we want you to look forward to our announcements, sign up to our different social media platform and like our pages, so that when you'll be updated on every and relevant information about this masterclass. Thank you very much once again for everyone, the facilitator, the speaker, the discussants, and all the participants. We thank you for your time, and we look forward to seeing you at the next masterclass. Thank you, and God bless. And bye for now.